Now let's start off with the news off from the Capital Markets Authority today about Uchumi, which has been seeking to relist after it turned into profitability. But now the regulator says the retail chain has to hold on, due to obligatory requirements by the capital markets that they have to at least have 3 years of profitability before being listed again on the NSE. What's your immediate reaction to that?
I think fundamentally Uchumi is starting to recover. Actually, it's been a recovery path, since the receiver manager took it over, and now actually he's in the board really as a managing director. But obviously, to really get listed, you need substantial capital. Currently, Uchumi is operating at a level where it's still under negative equity, so it needs to boost its capital, and of course it has to meet its requirement so that it protects the investors. Just
how do you see investors taking news though, this particular news though, because this has been one of the biggest success stories for Kenya. Then it went into a major fall that saw it run into debt before getting delisted in 2006, and for many it is quite a sentimental company, so to speak. What's your analysis of how investors will be reacting to this?
I think there are two things the CMA is considering. You don't want to relist the company and then the share price collapses substantially. You need it to relist at a footing where the price will hold on relatively well, hopefully to previous levels. At the current state that Uchumi is in, I think that will be unlikely. I think the CMA is looking at the aspect of the investors, trying to protect those, the current as well as the potential new investors who might want to invest in the company.
Let's also look at another company that's on the news, that's Kenil Kobil. What's your take on the ongoing wrangles between the oil market and the Kenyan Petroleum Refinery, and how has it impacted trading on that counter today?
The dispute between Kenil Kobil and the Kenya Petroleum Refinery runs back to 2006. And at the time, Kenil Kobil was contending that the Kenya Petroleum Refinery wasn't giving sufficient allocation as per the contract that they had. Subsequently we had the collapse of Triton, which was found to be speculating using storage facilities at KPRL. So that sort of boosted the case for Kenil Kobil. So they went into arbitration, and the arbitration case, Kenil was awarded a substantial amount of cash. I think it was about 4.5 billion shillings. And then subsequent to that, KPRL raised the cost of refining crude. Kenil declined to pay, arguing that KPRL was not efficient. And so they went to court again, and subsequently, we've had this, when Kenil Kobil is now being suspended. But going up to first half results for the period ending to June, I think Kenil Kobil is going to perform very well, and the management has indicated so. So we've had we've had a balance, that hasn't affected the share price so much downwards, especially the negative news, because of the expectation of positive news on the first half earnings.
Now, still on Kenil Kobil, it is trading ex-split. A lot of investors have been waiting for it to shed just a little bit and cash in on it. Analysts say that is a strong company. The stock is also very well positioned for growth going forward. Do you share in that optimism?
Yes, certainly. It's up close to 50% this year, actually, close to 100% this year. And if you look at the regional growth that it's adopted in the region, and now it's moving south, partnership probably with Engine, it looks very well positioned for the company. It's just unfortunate, this event, that they're actually getting suspended, but I hope that will get resolved.
Let's also look at Kenya Airways. Just after the news we had this week of its proposed sell-off of its stake in Precision Air. How do you see this impacting the company, which has been touted as one of the ones to watch, especially in 2010?
I think the investment by Kenya Airways in Precision Air some time back has really paid it off. That came after they failed to get into Air Tanzania, so they bought into a smaller company at that time, Precision Air. And so now they're reducing their stake, and the main idea, Precision Air wants to raise funds in order to expand its route network and acquire an additional fleet. So I think I think to an extent, Kenya is just reducing its stake. but at the end of it all, it will remain with a much more fuller airline, a much more regional airline, and I think they complement each other very well.
Other positive news out today as well. Pine Bridge projects a 5% economic growth for Kenya, largely pushed by agriculture, manufacturing, as well as confidence in the economy. Now, keeping in mind that a referendum is coming up in just under 3 weeks. What is, do you share that we might touch the 5%, and what do you think investors are thinking at this point in time?
I mean, that's very aggressive, but always, I think Pine Bridge has always had a very good track record in making such forecasts. And if you look at the economy, actually, we've done very well. The first quarter, we had a 4.4% growth, and it appears that this year is actually going to be very robust in terms of growth. So it is possible that you're going to make that number.